Hey guys, it's Sam with Ready, Set, Go. Welcome to the video. Pleasure to have you guys aboard today. Wanted to take a quick look at 3M, ticker symbol MMM. They are a dividend champion. They've been around for quite a long time. They offer a 2.42% yield, which comes out to 86 cents a quarter. Their stock is currently evaluated at $1.41 and 41 cents. So let's go and take a look. So if you're not familiar with 3M, it's not one of the more well-known stocks. They kind of, since they are a technology company, they don't have direct to consumer. They kind of deal with the industrial side, healthcare, consumer and office, security, protection services, things like that. And since they aren't public facing, a lot of you may not have heard of them. They're not like Coca-Cola or Ford that's constantly direct to consumer. So it is worth kind of doing your research into the specific products, industries, and distribution channels they have for the variety of products that they make. Beyond all that, dive right in here. 3M has actually hit a 52-week high recently. Of $147. They are trading slightly lower than that right now, but they've been on somewhat of a tear for the last 4 years or so. And you can see that their price has increased substantially. And that's the reason that you do want to take a look at those stocks. There's a reason that the price has increased. Investors, the institutional investors that do take a long-term view, these are one of the companies that you want to look for, 5-10 years from now, as long as they're continuing to grow their earnings and deliver great dividend yield. It's a great opportunity to get into these. So the one problem with 3M, from everything I've looked at, there is one problem that I've come across, and that is they are fairly overvalued these days. Their PE is sitting at 19.42. It used to be in the 13 range, and since that time, their earnings have only grown about 19%. So not sure if that evaluation, people are paying a fairly hefty premium, around 24 cents on their 5-year average PE. So, that is something to take a look at. If we go into good things, short interest is low. They recently ex-dividend date of 8/20, so that's August 20th. Institutional ownership of 70% is pretty good. You'll see that a lot of these day trading stocks, the ones that are popular with day traders and swing traders or anything on a short-term horizon, their short interest will fluctuate quite a bit. So if you go to take a look at like Rite Aid or Sprint, you'll see that it's considerably higher than some of these dividend champions and on the CCC list. So let's take a look at some of the technicals. Call open interest, put the call ratio. So not bad. Negative sentiment right now on that. But at the end of the day, we tend not to look at the options. It's on the third Friday of every month. The options expire. So, when you do look at this is a factor of what's currently happening. It's not a long-term view on the company. So just keep that in mind. It's always good to look at, but you also do want to know what type of time frame these metrics that you're evaluating are going to influence the stock on. So when we, in general though, 3M is looking fairly pricey by the looks of it. If you do a little bit of research into their product pipeline, you'll see that it is somewhat drying up. Their management team, they always like to refer to this new product vitality index, or NPVI. It essentially shows the effectiveness of R&D investments, research and development. Companies like this, they do want to show that it's similar to pharmaceuticals. They do want to show that the products they're releasing now are going to increase their revenue generation 5 years from now, 10 years from now, 20 years from now. And that's what keeps these companies going. So it's essentially the NVPI that they refer to. It's any revenue that originates from a product that's less than 5 years old. It's keeps the company young. It keeps them investors happy that the fact that down the road there will be continued increase. So recently, their management in I think it was about 2012, they wanted to achieve a 40% NVPI for their annual revenue. So 40% of their annual revenue would be generated by these products that are less than 5 years old. They set that target for 2015, but as we're nearing that date, they've continually not met that. It's very aggressive. 40% is really aggressive for new products, but it's still hovering around 33%. They lowered their target to 37%, and they've also pushed it back to 2017. So we went from 2015, 40% to 2017, 37%. So as you can see, their product pipeline is not growing at the rate that they once hoped it would. So that kind of does make you a little bit hesitant about, what future earnings growth may be like. Obviously, they are extremely diversified. Their product line is diversified as is, and they are going to continue to see some strong earnings. But at the end of the day, when we're investing for a very, very long term horizon, this is one of the things you want to take a look at. Is our money, could our money be wisely invested in other stocks that do have that product pipeline that isn't as dry and may lead to even larger growth down the road? So, well, that's it for today, guys. That's a quick look at 3M. Obviously, not going to make a recommendation on this specific one, as I myself don't really know how I would play this. I strongly suggest you guys go take a look at it, though. That 2.4% yield is no joke. That yields dividends down the road. So if you do feel comfortable about it, leave me a comment. Let me know what you plan to do with 3M, and whether you want to buy, sell, hold. Would love to hear some feedback from you guys. And as always, if you enjoyed the video, please like, share, comment, subscribe to my feed. I will continue to post more videos like this, and it's always glad to hear back from you guys. Great. Well, thank you. That's it for today. Catch you on the next video. Peace.